Interested in real estate? How about wealth? Well, they go hand in hand. And here, you'll learn all about it. Welcome to Be the Bank, a podcast where we discuss and debate the topics centered around real estate investing. Your host, Justin Bogard, shares insights into investing in real estate to create real wealth and passive income for you and your family. He'll share stories of real estate investments done right, walk you through the process of owning a real estate note, and most importantly, educate you so you can be the bank. This is Be the Bank, brought to you by American Note Buyers. Now, here's your host, Justin Bogard.
Hello, listener. I hope you had a fantastic, wonderful holiday. And this is the last episode for season 5 of this year. And we'll be starting season 6 here in January. So today's a pretty special episode. Not only is it the last episode, but my partner Richard Thornton is going to be on today. And we have some cool little insights as to what's going on. So you guys should definitely stay tuned. Yo, what's happening?
Dude, it's a nice day in California.
You know, that little music that plays in between the opener and now, I always have the volume up just a little bit too loud. So with these headphones that I have on, it's like, it's too loud. I have to turn it down. It's like sound check real quick.
Mm-hmm.
Yeah, man, weather's been pretty good out here. We creeped down into the 20s for a minute, and then it just kind of warmed back up. So, I mean, I got all the windows, open to sunlight in here now, and it's already like 73 without even turning on the heater, and it's like 40 outside. So I'm liking it.
You keep telling me these forecasts, and I just, it's low 50s here, Justin. It's clear, but it's just not that warm outside, and I'm sure your nights have been a lot colder. But we probably already had, and I'm north of San Francisco. We probably already had a dozen nights that are below freezing. So,
do you have to take all your plants and bring them inside then?
Oh, yeah, you have to cover them up with sheets and stuff like that.
Yeah, we just let them go here.
Yeah,
it's time for
them. You grow the right plants, right, so that they can take that.
Yeah, we're not talking about cannabis, by the way. We're talking about real, regular plants.
I don't know if cannabis can take the frost.
It can take the heat, from what I hear.
It can take the heat. That's right.
All right, man. So
now that's the cannabis market is not a market that's doing all that well these days.
It's not hot. There was a lot of talk about that a while back, wasn't there?
Yeah. I mean, yeah, it's collapsing because of overproduction.
Doesn't surprise me. So what other markets that I've been kind of reading about is kind of the commercial real estate market. So do you know the guy John Burns in the CRE Daily?
I do.
Okay. So I've kind of subscribed to that newsletter recently just because I've seen some charts of theirs. And I was like, oh, that's pretty cool data and stuff. So I've been kind of reading a little bit, and it found other articles out there, and it kind of puts it all together in this newsletter just to kind of give you a good round knowledge on the commercial real estate space right now. And it had this article about commercial office real estate in some of the bigger cities across the country. And in particular, I think it was New York. That it's been a few days since I read it. I think it said it was New York, where some of these landlords are discovering that, they're not going to get their tenants to bring back, their office workers and fill the space like they want to. And so some of these guys are having to, get out of their leases. And so some of them are actually considering and actually doing the full architecture remodel of some of these office buildings and turning them into luxury residential apartments.
Well, if you've got the window space and you can hollow out the core to create more window space, I think that's it's a viable opportunity. If you've got a 40-story building with a single floor plate and no windows, no interior windows, it's going to be kind of tough. But
yeah,
good idea.
Yeah, that reading further in that article, it also said that they were preparing for the future and thinking about autonomous cars being able to come into like the building. So like kind of a ramp
Mm.
up into the middle of the building somewhere to kind of pick up and drop off residents. So,
Mhm.
to avoid, the going outside to get in the, doing air quotes here, taxi,
Mhm.
to have that, or not autonomous, just, regular, for example, Lyft or Uber drivers or whatnot, for shared ride services.
Mhm.
Reminds me of
Did
going to
you ever
Disney
you're
World.
saying that just reminds me, did you ever you were it's probably when you were did you ever listen to the Car Guys out of Boston? Their NPR show?
I might have. If you said the name of it, I might recognize it.
Well, it was Ray and Tom Magliozzi, I think was their last name, and they bantered back and forth about how to fix cars and things like that. And they had this fictitious Russian um, taxi driver, and two of them, and one was named Pickup, and the other one was named Drop Off. And so
Pick up and drop off.
Pick up and drop off. So,
For a minute there,
so
I
you
sound
said
like
that,
that,
and
that could be a name. That could be somebody's
that
name.
reminds me of those two Russian taxi drivers.
Well, that'd be interesting. And perhaps maybe a lot of the bigger cities are going to figure out some sort of way to do that. Because number one, I guess it kind of fixes the housing potential problem that people that want to stay in that type of environment, perhaps
Mhm.
be more downtownish type of people. I guess around here we would call them millennials because it seems like the millennials are the ones that want to have that downtown sort of a living environment, where everything's close by and they can walk to and really not have to have a vehicle. They can just, ride the rented scooters that they can just, hum across downtown area with or get shared ride services. And it seems like if they don't, Richard, they might have some implications with, you definitely don't want a big city to start being vacant. Because I think you even mentioned before, like San Francisco kind of got kind of bare there for a little bit to where there weren't a lot of as many shops around and just seemed kind of almost dead compared to what it used to be when it was, humming and
It still
buzzing.
is. Yeah, if you go to the financial district during the day, it looks to me like a Saturday, which is not much because there's not much else down there.
That's a good way
So a
to
lot
put
of
it,
the
like
Shannon
Saturday.
shops
Yeah.
and yeah.
Yeah.
But so one other idea that I've heard that I actually thought was a pretty good idea, and you can only do so much of this, but I think a lot of this infill will happen a little bit here and a little bit there, is to put data centers in some of these buildings because a lot of the data centers are going out on these big plots of land in the middle of nowhere, and
Yeah.
you've got to run high tension lines and all this stuff to them. Well, you've got all that right there. So if you could take 10 floors of one of these buildings and stack it with servers right close where they're needed, that's a pretty good idea.
Yeah. That makes a lot of sense too, because you can just go vertical as opposed to expanding out
Yeah,
widthways and
yeah,
waste all that real estate.
that's right.
Cool.
That's right. So I think the market's going to slowly come around to better, it always does to resolve the issue, but it just may take a little while.
Yeah, I can see that. Well, Richard, I know you have an announcement that you would like to make and stuff, and so I'd like to give the opportunity to make your announcement.
Well, it's not much of an announcement. We all do this. I mean, I've got a lot of gray hair, and I finally figured out that I was 65 a long time ago when, as most people retire. So I've just decided to retire. I thought that I've certainly enjoyed all of our efforts, but it really suddenly kind of hit me that if I work until I'm 80 full time anyway, I'm not going to be able to enjoy much
Yeah.
of. And I've got a couple physical limitations now that really made me start to wake up to that fact. And so I thought I should think about taking it a little bit easier. So yeah, I'm going to retire for the most part. I'm going to keep my fingers in notes a little bit, but I'm going to leave the A and B funds to you, and basically, as wish you well and still help you in any way I can. But it's time to pull back a little bit.
That's awesome, man. It's been a fun journey. We started this together knowing that at some point, you were going to plan to kind of exit out. We didn't know when that was, and And it's just kind of cool how we always, have good conversations about what's going on in each other's lives and kind of what direction we're going. So what type of investments now are you looking forward to doing now that you're kind of don't really have to worry about day-to-day specific tasks anymore?
Well, I think I'll continue to, make loans to you for A and B to sort of make your life easier. Um, I've got, actually, one of the things I'm going to do is I'm going to buy back a lot of my partials.
Okay.
I have a lot of 10-year partials out there. And I think that I was kind of struggling to find really good notes. And there's a clause in your partial that allows anybody who's used the note school paperwork to buy it back basically whenever they want. And I thought, wait a minute, I've got notes out there that I bought a long time ago that are kicking off a 15 to 18% return,
Yeah.
which we struggle to get that right now. And at this point, they've been paying for 4 or 5 years or more. I thought, why don't I just buy these back? And I mean, they're great little income streams.
Yeah.
So I'm going to be doing that after the first year. We're going to go to the Galapagos here in January and tootle around South America a little bit. And after that, I'm going to start buying back a lot of the partials that I did.
That sounds pretty good. So your plan obviously is not to be an active investor, but you're definitely trying to stay in the note space as far as that's concerned. Buy some older partials from previous investors that you've sold them to, and just get a really good cash flow stream going to where you're just not having to have the headache of just real property. Is that sum it up?
Yeah, I mean, I'm fortunate. I've had enough notes over my career, which hasn't been all that long in notes, but I've got a nice little stockpile. When the pandemic hit, I sold off quite a few of my notes and took profits there. But I've still got a nice little portfolio, and I can use my Roth IRA funds and buy back some more. So I'm going to be just fine. It's sort of what every note investor wants to do, which is basically live off of that steady Eddie mailbox income. What I don't want to do is to get back into a lot of the day-to-day, which is going to happen eventually, or inevitably anyway. But at some point, somebody's going to fault, or somebody's going to have a trailer in their front yard, and I'm going to have to call them and blah blah blah. But I want to try and minimize that.
Yeah, not nearly as much effort as it is today as it will be, tomorrow, so to speak.
Yeah, and just the marketing. I mean, as you and I said, I just kind of hit a wall with marketing. I surprised myself. I thought I was going to be in this with you for another 5 years or so, and I started to get everything going, and just realized that I've climbed this wall twice before in the big marketing era.
Yeah,
and did it very successfully. And I just realized that it was going to be a longer, higher wall than I wanted to climb this time.
Looking back on your investment kind of history, what space did you find the most interesting and the most fun as far as investing in? Because I know you've done a lot of different types of investing with not just real estate, but other types of investments as well.
Well, I'd say the most fun. First of all, one thing that I thought I would mention is, I think some of us get stuck in doing one thing, and you really have to. In retrospect, you really have to follow the cycles. So when I had my mortgage banking company, right, a commercial mortgage banking, when we built it up and it was, great volume, and we were finally bought out by a bank and wonderful. But it was a cycle. The Fannie Mae, Freddie Mac, and FHA, which we were making a lot of their larger apartment loans, $10 million and up. We're starting that whole effort. And so we rode that wave. And when the banks woke up to how lucrative all that could be, it was time to sell.
Yeah.
And so at that, I noticed that senior housing was hot, and you could get great returns. Probably be at 15% plus after being in a deal for 3 years and do triple net leases. So I jumped into that with my old clients and So it was just constantly looking at where the cycles were and taking advantage of those. You don't want to try and swim upstream. But
Right.
I'd have to say that overall, I had the most fun in senior housing. I really enjoyed working with the clientele, working with a lot larger, because we did $20 million deals.
Yeah.
Um, and that was with the financing. We'd get a $15 million loan from FHA, but that was fun. That was a lot more set it and forget it. But
Yeah.
it was just fun business. I just enjoyed it.
How long would it take from the time that you find the opportunity to you actually start funding it? How long does that take with senior housing facility?
Well, that was one of the drawbacks. I mean, you were usually looking at maybe 6 months to the acquisition and somewhere between 8 months to a year to get it purchased and the money raised and the deal done. And there again, you got to be in a very small niche. I was very fortunate. I had a bunch of well-heeled clients, and I could call them up and do just very simple shirt pocket syndications. It
Right.
wasn't a big deal to raise $5 million. We're struggling to raise $5 million in the note market. But that's where those guys wanted to be, and they don't want to be in the note space. They don't want to be in something that's as small as we're doing.
Right. Yeah. They're used to dealing in a lot bigger numbers.
Yeah, they're bigger numbers, and it's just where some people want to be. So right time, right place. There's a lot of that.
Is there anything that you invested in your career that you just despise doing, that you just like, why the hell did I do that?
That's a good question. I loved flipping. I thought,
Yeah.
I mean, I had the most fun. You said I really had the most fun
Yeah.
flipping houses.
I did too. Even though I didn't make much money, I still had fun doing it. It was just kind of neat.
Well, that's it. I had one. There was this sort of exclusive seaside residential area around here,
Mhm.
and I thought, oh, I'm going to branch out and go out there. And I did a flip out there, and I just lost my shirt on it. And boy, did I get that was probably the dumbest thing I ever did. It was an hour's drive, and I totally missed the market. And it was exclusive, but what I didn't realize was it was a Home Depot market. People, they wanted Home Depot kitchens.
Gotcha.
And I put this really fancy thing, and I thought, well, these are expensive houses, and these people are in this exclusive place but they wanted toys. These are people who had garages with 5 stalls, and they had an RV and a boat and a Porsche and this, and
Right.
it was a toy market.
Okay.
And I totally missed that. So, oh well.
Oh, okay. Did you ever get into traditional investments like in the stock market or like oil and gas or anything?
I went through the first .com boom and bust, and I lost my shirt in the first bust. I probably should have held and stayed, and I would have been much wealthier than I am right now. But
Yeah.
I got nervous and got out at the bottom, and I've just never been much for stocks and bonds. I've been more of a real estate guy.
Yeah. Oil, gas, or coins or anything?
Never looked at
Never.
any of that.
No.
But
Precious metals.
I think flipping land like Eddie Speed does is I sort of wish I'd gotten into that at some point. Seems like that's a nice gig.
Absolutely. Yeah. He definitely cut his teeth with that stuff, didn't he?
Yeah, but there again, that's a little bit hard. It's harder to do in California because the numbers are so big. You could
Right.
do that in your backyard.
Yeah.
It's really easy to do that in Texas, but you're spending $750,000 for an acre of land here.
Wow.
So, yeah,
That's unheard of.
it's a little bit different.
That's very different. Absolutely.
Mhm.
Well, do you ever recall off the top of your head, since flipping was was the most fun for you, and honestly, it was the most fun for me. Do you ever recall a return that you made flipping a house that you just couldn't believe that you made, like can you draw one off the top of your head? Be like, I doubled my money in this, or what have you? Like your best return in flipping a house.
Well, so one of the reasons I got out of flipping was because a lot of the weekenders started to get into
Yeah.
it, and the markets got to scale. But I started flipping in 2010 when prices were really low,
Okay.
and I made 50 to 70%, 75% off of everything I did, everything I
Wow.
flipped. And I did that for 4 years. So that's kind of what I was used to. And when things really started dropping, and guys were making 20% off of a flip, there's a lot of guys out there right now that think, hey, look, I hit it out of the ballpark if I'm making 20% off of it.
Yeah.
But
Right.
again, the numbers were bigger. I was having to buy things at $500,000 and put 300,000 into it. And yes, I mean, at the end of the day, I was making $300,000. But
You also had
you
to
get
put
six
up.
of those going.
Yeah.
Yeah, you get 6 of those going at once, which is what I had.
Yeah. I never had more than like 2.5 projects going at the same time of flipping, because I just don't see how you could do that with, or anybody can do 6 of them, in a row without a lot of help, with managing it.
Well, I didn't do any of the construction myself. I had a construction partner. So he did all the construction, and he did his work at cost, and then we had a split agreement.
Yeah,
And he
that
would
makes the
always
most sense.
Yeah, he'd always make 10 to 20% more than he would have made had he done it, and just made me a regular paying customer. So he
Right.
was willing to take that risk, and I was willing to make that split because I also knew that if I did that, I wasn't going to get fleeced on building costs and everything else. It was just.
Was he the same guy that did all 6 of those at the same time, or all of your properties, or did you have
Yes.
multiple contractors?
I did all my flips with one contractor.
Okay, and he was just a general that had all the subs that you guys needed to complete the job.
Right. Mm-hmm. He was a guy, I did my first. He actually did a deal that we bought for my mom. We bought a house for my mom up in Northern California. I got to know him, and I approached him. I said, "Well, do you want to do a deal?" And so we did one just for straight profit, and that worked out. And so we just built from there.
That's very cool, man. So how long have you been investing in real estate then?
Well, I mean, you have to qualify that, but yeah, I mean,
Okay, making it your full-time job.
Gosh, my full-time job, 30 years, 35 years, something
Nice.
like that. I mean,
Nice.
Again, riding the waves. I was buying my first houses in the early 80s. And at that point, the game was to buy into a 100+ unit townhouse project.
Yeah.
This is in DC. You buy into the first phase before they actually had any units that you could occupy. And so your money sat there for 6 months while they were building the unit, and they finally got it. And then they started to sell phase 2 and phase 3. So they built in, they had $20,000 to each phase. So you had this built-in appreciation. By the time you get through phase 4 or 5, you'd made $100,000. You wait until after they sell out in phase 5, then you sell. Sorry. You sell your unit.
Yeah.
And and I probably did that 4 times. So we just house surfed and probably
house surfed. That's a cool way of putting it.
Mm-hmm.
That's awesome. Did you ever have to calculate, like, I need this much to live off of, and as long as I get that passive income to come in, then the rest of it I can just funnel into the retirement account and then start living off that in the future? Were you ever somebody that did that?
Yeah, that was my goal point. I mean, that was I truly worked from the start from your goal and then work towards that. And if you haven't made it every year, if you haven't made it every 6 months, in other words, if you're so far afield that you're not going to make it, then you better do something. And not to get too personal here, but when I had my mortgage banking company, I was making a whole lot more money than I am right now. And so I had to write some huge checks for my divorce. And that severely knocked me off my goal towards, and so I had to scramble. And then we both know about the recession, so there it wasn't a straight path as much as I would like to have been.
Right.
I probably would have retired 10 years ago if I had not done all that.
But you would have never met me and had all this fun, right?
I know.
See what you missed out on?
I know.
So what are you going to do now with your time? Are you going to try to vacation more? There are certain areas in the world that you want to visit?
Well, yeah. I mean, there are certain areas that we want to visit, and I'm going to certainly do a large part of that. But I went to school and got an urban planning degree and a finance degree, as you know. And so City of Petaluma needs some help with their general plan. They're redoing that. And I joined a couple of typical retirement stuff. I joined a couple of urban planning groups that are citizen oriented. And I'm going to look for some houses. I would do another flip with a money partner or something like that, or a construction partner if I could find one. I'm afraid of construction costs right now.
Right.
Though. So I'm going to, like I say, I'm going to buy back I'm going to continue to look for opportunities on a limited scale. And I think that's the best way to put it. And then travel a little bit and, do things that I just find enjoyable.
That's awesome, man. Well, I wish you the best in your retirement. I know this isn't goodbye or anything, but we definitely wanted to congratulate you on all the success that you've had throughout your career. It's been fun. I've learned a lot from you. My most favorite thing that I've learned from you is kind of when I first met you. I think it was around 2016, 2017, was you were telling me how you would make sure that you recycled your money like 3 times a year. I was like,
right.
That's a really nice perspective, because that makes a lot of sense, because it kind of pushes you for a goal. And it's like, if you're trying to, that's when we were able to flip loans like there was no tomorrow, right? Because there was a lot out there that were good deals. And, if you can recycle that money 2 or 3 times in a year, I mean, that's a pretty good velocity going. So that always stuck with me. So I always appreciated, you sharing that with me, especially in all the other things in your investing journey that have helped me along too, because I wouldn't be able to set up the fund without you. So I do appreciate that.
Well, you've been a good partner. You've been a very good partner. I have to admit, I admire just seeing how you live your life. I admire how you handle yourself with your kids. And you've been very responsible and responsive, and that means a lot and has been a lot to me.
You're welcome, my friend. All right, guys, this is episode number 26 of season 5, the last one of the year. We hope you guys have an awesome, safe, happy new year. And we will see you guys in the first episode of season 6 here coming up in January. So, Richard, thanks again, my friend. And the audience, don't forget to check us out on our YouTube channel, the American Note Buyers YouTube channel, so you can watch the video stream of this podcast as well. Until then, guys, have a good new year.
Bye.
Thanks for listening to Be the Bank. We hope you learned something from today's show. If you enjoyed this episode, please rate and review us. Plus, check out our channel on YouTube and follow us on Facebook and Twitter at Be the Bank, and on Instagram at Be the Bank Podcast. Be the Bank is sponsored by American Note Buyers. Thanks again for listening.